Well, hi, everybody. Welcome back to My Favorite Mistake. I'm Mark Graven. We're joined today by Mark Myers. He is the founder of Peak Profit Solutions. He's a tax savings architect. Mark brings over 20 years of successful business operations and high-level consulting experience to clients and financial professionals he services. He employs the same discipline and tenacity, in finding tax savings as he did serving his country as a former Marine Corps sergeant in Bravo Company 4th Marine Division. So with that, Mark, thank you. Welcome to the podcast. How are you today?
I'm doing fantastic, Mark. Thanks for having me. Looking forward to the conversation.
Yeah, me too. Thank you for your service. For those who weren't watching on YouTube, I get a bit of a salute. I don't know if I'm deserving of that, but thank you. Thank you for being here and being willing to share your story. There's a lot to talk about, I think in terms of the work you do, mistakes people might make regarding taxes or business finance. But before we get to all of that, the question at hand here, from different things you've done, different aspects of your career, looking back, what would you say is your favorite mistake?
Favorite mistake. That is, I've got a lot of them, right? So I had to kind of dig deep for this one. But I would say my favorite mistake, and you know this, confidence is very important in anything you do. You need to be confident. Overconfidence was my favorite mistake. Mm-hmm. What happened in my overconfident mistake was when I transitioned into what I'm doing now, which is the precursor to what I'm doing now, I was overconfident. Mm-hmm. I was in New York for a few years, New York City, and then Los Angeles for a few years. And I managed really high-end health clubs. I opened up a number of locations for a really high-end health club brand. Mm-hmm. I learned to be a phenomenal owner-operator. I understood EBITDA margins, driving revenue, reducing expenses. And I realized at that time, I would be better served as a consultant to business owners because I really understood how they thought or how they needed to think to be successful. So I left the health club world, which is where I got my undergraduate work and my master's degree. And I went into consulting for business owners and got an insurance license, but I was so overconfident that I didn't join forces with any mentors. I thought I could do it myself.
Yeah.
So that was my overconfident decision, and this was in 2007. Mm-hmm. So it was not good timing in that the market pretty much crashed significantly. I was trying to figure it out myself, not having a mentor or a structure to follow. So that was my biggest and favorite mistake, to say, never do that again. Always find someone that's smarter than you are and go through that guidance process, even though you have confidence in your abilities to be successful.
Yeah. Yeah. Well, gosh, thank you for sharing that, Mark. And I think there's a lot we can unpack there. I don't know if you have a story, from that time in the health club business to help illustrate, like, when is it a fine line between confidence and overconfidence? When do you find or realize, like, when did that occur to you that, okay, this is maybe now a problem, too much of a good thing?
Sure. I think it really occurred, and I thought I was indestructible to a sense in that I'd always done everything professionally. And it's been a blessing that, other things that I've done growing up in life, in athletics, et cetera, it's been a blessing to excel. Mm-hmm. So when I transitioned away from an industry and work that I was doing, that I was always excelling and overperforming and in the top, 2%, I just thought it would carry right over into an entirely different career path that, although it can be complex, I thought I knew enough. It's almost like you don't know what you don't know.
Right.
And again, that overconfidence line was, if I had chosen to work with a mentor or even an organization that could essentially give me some really good foundation points, even if I only did that for 2 or 3 or 4 years and then continued on to do create my own business, which is ultimately the goal of every entrepreneur, right? It's to own their own business or be in control of that. That was the fine line. I didn't have the foresight to know that, hey, this market is going in a significant decline. Now more than ever do I need help. So, and I didn't take it because my overconfidence played too big of a factor. My ego, I guess, so to speak.
Yeah. Yeah. So it sounds like that then was the wake up call compared to moments in the first business and then becoming a consultant. Like I said, market downturn, that was sort of the gut punch, if you will, that said, hey, you got to do something differently. You've got to find someone who can help. Like I'd be curious to hear more about that thought process of sort of, being aware of it and deciding to do something about it.
Sure. And the reality, Mark, was I got to a point where everything I was doing that I thought was ideal, I thought it was phenomenal, wasn't working in that I was not producing the revenue and obviously the profit I needed to support myself. So the reality was when the income dries up, you're brought pretty low and you realize that, I need to do something different. So that's really what happened. I ended up having to go back and manage a health club for another year or so.
Yeah.
To get back on my feet. And then what I realized was now I know that I need to join forces with those that have been there, done that, and give me some kind of an opportunity to accelerate and, learn the things that I didn't know that I thought I knew.
Mm-hmm. So then where did you find that help? Or was there a process of trying to figure out who best to get help from or in what capacity?
Sure. Yeah, I actually sought out a couple of mentors in the insurance space. And then what happened was that evolved into mentors in the tax efficiency space. Mm-hmm. So I started out with consulting to business owners specific to finance and wanted to be more an advanced planning specialist and integrate advanced insurance strategies for business owners. Mm-hmm. Which is not really a blue ocean. A lot of people do that, but I felt like I could do it well and offer some additional insight that maybe others couldn't because I had a significant amount of experience running businesses very successfully. I wasn't the owner of those businesses, but I was treated like an owner operator and paid like one based off of EBITDA and all these clubs. So that was where once I realized I needed to find others in that space that could really guide me through these tough points. Mm-hmm. And then, of course, the great news was when I really realized that there was a blue ocean out there. And that blue ocean is really being that tax expert that high income earners are not getting. Even though they have a phenomenal wealth advisor or they have a phenomenal tax professional, they're not getting that extra layer or two or three of tax efficiency that you can when you go above and beyond the norm.
Yeah.
Right? Above and beyond what's out there that everybody knows about. Right. Mm-hmm.
So, we'll come back and talk about some of these, tax strategies or business strategies, and part of your business, Peak Profit Solutions. A couple of the questions to kind of wrap up on your reflections of learning from overconfidence, vowing not to do some of those things again. Do you still have a mentor or mentors or coaches that you rely on today?
Absolutely, multiple. And I engage with them on a monthly basis. And in addition to masterminding, it's also a way for me to ensure that I'm staying relevant and also getting a different perspective, right? Because, my perspective might not be the only and the most correct perspective. In fact, I might be outright wrong until I hear three other perspectives and realize that my vantage point is a little off center.
Yeah. And then are there certain things that you do today, to guard against overconfidence creeping back in, or the risks that might be associated with overconfidence? Like, do you have mentors who would maybe call you out on that, or is it a matter of self-awareness?
Yeah, I think that's a great question, Mark. And I'd say the biggest thing that I do to offset and ensure this doesn't happen again is I have kind of a rule. If I find myself making more than two fairly large decisions without going to my mastermind network or my mentor network, I'm in the wrong, right? Okay, You can make one pretty strong decision on your own, but now you're starting to make two and three, and you're not going to those mentors and saying, hey, I'm making this big decision, do you see anything? What's your perspective on this? Do you see any potential pitfalls? Do you see other ways that I could do this? So really, it's like, do not make more than two decisions that are larger in nature
Mhm.
without the help of someone else. And that's kind of my plumb line, right? I can get away with one decision, that I need to make fairly quickly, but outside of that, get the feedback before you just continue on and do it yourself.
Yeah. Yeah. Seems like good advice. Something to reflect on there for sure. I want to ask a little bit, thinking back to your time in the Marine Corps, thoughts that you have around, leadership lessons, what was ingrained in you in that setting? Is there, kind of similar thought around a fine line between confidence and overconfidence when it comes to, let's say, military situations?
Yeah, I think the military really taught me to be resourceful.
Mm-hmm.
And of course, in the Marine Corps, you learn a lot of discipline,
Mm-hmm.
right? Even though it might feel like a lot of games at times, right? Because the goal is to ensure that you understand that you're only as strong as your weakest link, and you have to work together as a unit. That's the Marine Corps way, Semper Fidelis, brotherhood. But
Yeah.
at the end of the day, the discipline and knowing that every brick you lay is important. And if you don't lay a brick that day, or two or three or bricks that you're supposed to because you're not disciplined, then you're essentially shooting yourself in the foot. And if you're laying those bricks in a slipshod way, right, not aligned and mortared correctly, then your foundation is weak. So that discipline really played a role in the leadership, and knowing that your everyday leads to the outcome. It's like I've heard this before. I think it's probably who knows who said it originally, but I think it was Tony Robbins. It's like when you're golfing, you're swinging that 7-iron or that 5-iron or that driver, and the angle of that face of that club is off just a degree. I mean, the outcome can be 100 yards the wrong direction, like literally.
Yeah.
So it's that every single day, the discipline and the precision, because it's going to lead to the longer term outcome that's really the right direction.
Mm. It's you say direction. I mean, there's an expression. I have no military, service background of my own, but you hear some of these expressions, and this idea that Marines run toward the gunfire, which is an interesting direction or a directive. That, I mean, it's got to require certain confidence, not just in yourself and your own training, but in the brotherhood, or it's increasingly co-ed. Your team, if you will. Like that's just really, really powerful to think that people in that spirit of service and being part of something greater than themselves, that can really drive help people achieve things they might not have thought possible. I mean, it seems like a really special part of that Marine Corps dynamic. It was more of a mini speech there than a question. Let me ask it as a question, or what are your thoughts or reaction on that idea of being confident in yourself and that team dynamic?
Yeah, I really understand where you're going with it, and I think that it's one thing for sure, whether you're in any branch of the military, Air Force, Navy, Army, even the Coast Guard, but Marine Corps particularly, because they're first to fight, they're always the first on the line, is that you have to overcome a certain element of fear, right? So you know that if you can't overcome your fear, you're not going to be very effective.
Mm-hmm.
So it's particularly in the Marine Corps, being able to face your fear, right? Whether that be a battle type situation, because you know that you are the first in. So you can apply that to anything in life, anything that you're tentative about. It's like the only way to progressively move forward is face that fear and move forward. And note that if you fall, if you get up and continue to get up, it's likely that you're going to continue to move in a forward progression and be in a better place.
Yeah.
Usually, quitters never win and winners never quit.
Mm-hmm. Yeah.
Right. But the good news in real life, it's a little bit different than the Marine Corps. Generally, you're going to have your life, In the Marine Corps, you may not,
Yeah.
depending on how little fear you have. You do have to have a reverent amount of fear to make sure you maintain your livelihood, right, for your
Right.
life.
Right. Right. And and it's just it's why we thank, for many reasons, we thank people for their service. There's that potential of that personal sacrifice, and realizing that your life is on the line. That's that's special. That's admirable. Yeah.
No, thank you very much. I appreciate that. So it was definitely an experience that I will cherish,
Hmm.
and it definitely set a course for me for the rest of my life, and I know that it created a lot of difference,
Yeah.
a lot of good.
Yeah. So let's talk about your current business, Peak Profit Solutions. You had shared earlier you have this desire to want to consult and help other business owners. So this is a very specific form of help. Tell us about that business and how you ended up with that focus and that interest.
Yeah, it really was an evolving kind of process. When I went into the consulting space for business owners and really didn't want to be securities licensed, I didn't want to manage money, but I wanted to solve problems, help the business owner solve problems. And I knew that insurance strategies could be very, very powerful for business owners if they are structuring them right with regard to protecting their business and key man policies and buy sell and premium finance and all the things that a lot of business owners maybe didn't realize that they needed or were available. So that was a starting point. And then, of course, what I realized was, insurance has a tone of tax savings, right? Because when you structure insurance appropriately, generally speaking, you have tax efficient growth and tax efficient or tax free distributions in the future. So there's always a layer of tax efficiency in insurance. And I was just always enamored with that.
Hmm.
And as I continued to grow in this space, I just was introduced to concepts and different individuals and organizations that essentially focused on a certain sliver of the tax code.
Hmm.
And it just opened up my eyes to say, oh, wow, you can actually do that. That's tax code 1202, or this is, 453. It's like, and these things, if you apply them correctly, you have significant tax efficiency and business efficiency.
Right.
So then I started saying, wow, that's not a lot of people that know these things. I'm sure there's more. There's 75,000 pages of tax code out there. So I put my miner's cap on and I said, let me go out there and find all of these efficiencies that are this sliver of the tax code, that sliver of the tax code, and let me put together a toolbox. So when I go in and consult, I can have multiple efficiencies and layers of tax reduction that they likely had no idea. And guess who else didn't have an idea? Their wealth advisor and their CPA.
Right.
It's almost like, if you have a health problem, you have a general practitioner,
Hmm.
but depending on the significance and the specifics of your health problem, maybe you need to move to an ear, nose, and throat specialist. Maybe you
Right.
need a neurosurgeon. Maybe you need an oncologist. Like, that's where I was going. And really what I do brings those additional layers in, and I don't replace the wealth advisor.
Right.
I just create more efficiency. I don't replace the CPA.
Hmm.
Just bring these extra layers in that they don't have time or the bandwidth, or maybe their compliance factors. They're just so heavily compliance. They have so much compliance to contend with. Some of these things they might not be able to offer, even if they wanted to.
Hmm. What's an example of that when you say like their compliance? That's with financial regulations. That's different than the tax code and tax law. Is that?
Yeah. So let's talk about financial advisors, and I get like 80% of my business. We'll say 70% of my business is referral from a financial advisor or a wealth advisor or a registered investment advisor, usually RIAs, because they have a little bit more flexibility. Well, because the financial markets are so historically speaking, I mean, they have been riddled with fraud and all types of things. So there's so many different laws that protect individuals. So a wealth advisor generally has layer upon layer upon layer of rules and regulations with regard to compliance that says they can do this, they can't do that. And when it comes to what they can do, it's pretty simple. You use the retail chain, the retail platform that's FINRA regulated for how they invest their other people's money. They can't, if they start offering like real estate projects up the street that their cousin is working on, and it might provide 120% return.
Yeah.
They can't offer that. They would lose their license, right? So, so then that's where I'm going is what I'm offering is not my cousin up the street offering this tax efficiency. It's an attorney group or a legal group that's been in this space for years and years and years. Well, they can offer it and it's in the tax code. It's black and white. It's just that if you're a wealth advisor, can't go down that road because it's not a FINRA regulated, investment specific offering. It's a tax efficiency offering that's in the tax code that these attorneys are doing that the wealth advisor couldn't offer even if they wanted to.
Yeah. And there's these different phrases, and correct me if I'm wrong on any of this, but there's a difference between, let's say, tax efficiency, minimizing taxes by using tax law versus tax avoidance in a way that might end up then getting you penalized or in legal jeopardy, right? There's that question of kind of better understanding the law versus doing things that are going to get you in trouble, kind of as broad categories, right?
Yeah, I think a good way to put that, Mark, I like the way that you broke that down. I mean, essentially, the most basic level of tax efficiency is when you have a tax professional, whether they're an enrolled agent or a CPA, saying, "Oh, did you know that you can take a mortgage interest deduction?
Mm-hmm.
Oh, did you know that your standard deduction between you and your wife is this, and that actually is more than your itemized, so you might as well use that." All the basic stuff, all the day by day. But when you start moving outside of that, now you're looking at, well, what is possible in the tax code? What is written in the tax code that you can actually, as long as you follow the rules, because everybody has the same rules to follow.
Yeah.
Stay in the black and white. You got to start going to gray, then you can be in a problematic position.
Yeah.
So that's the key. It's just staying in the black and white code. Sometimes it's putting together a couple of pieces of the code and ensuring that there's business purpose for doing so. And the net result is there's also tax efficiency because the IRS doesn't like anyone to do anything just to save tax. Mm-hmm. There needs to be some type of business purpose or economic substance. So when you look at this code and this code, doing these things in a more synergistic way, putting them together, there is a specific business purpose for doing it that creates more efficiency. And it just so happens that there's also more tax efficiency in doing it. Well, that's totally fine. But when you start dropping all those things and just running after the tax savings, well, you're likely going to get yourself in a position where if you do get audited, the IRS might say, we think that there's not enough economic substance and you just did this for tax savings. And even though it is in the tax code, it's substance over form, form over substance. They come after it because they want their tax revenue. That's what they're in the business for. They don't make the rules.
Yeah.
They just have to follow them and say, we don't think you're following them. So they could take it and you can say, we're going to go appeal and we're going to go to a tax court. And of course, it could be a drawn out process and you might win.
Yeah.
A lot of times you don't hear about people winning, but there definitely happens. But the IRS doesn't like to take on cases that they don't think they can win.
Yeah.
That way they look like they're, that Mike Tyson, 50-0 competitor,
right.
Because they only go after things that they know that they have a good idea they can win.
Yeah.
So that's where I stay in that realm. It's like if the IRS were to look at this, even though it's not something that's the norm, they're going to walk away from it because it's black and white. There has economic substance, and you're following the code. And there's usually a historical precedent that this has been done. There's tax court precedent that says that, hey, in the past, this has come up to a question, and guess what? This tax court ruled totally fine. This tax court ruled totally fine. Just do it right. Or this court said not fine. Why? Well, because they didn't do it correctly.
Yeah.
Okay, that gives us the guidance. That gives us a roadmap. You can do this. You can do this. You can't do that.
Mm-hmm.
Right. So as long as you're staying within the lines, you're good.
Yeah. But there's the black and white, there's the letter of the law, there's the lines, but it sounds like from what you're describing, there is some element or question of interpretation then. Judgment call of was there a business need or was this only tax motivated? I mean, that's where it may
that's right. Yeah,
be unclear,
exactly.
Right? If you're making a decision as a business, someone might be taking on, well, there's a little risk, I might get audited. but I would pay back tax. I mean, there's varying degrees of penalty or risk that somebody might be willing to accept, as opposed to like, well, I don't want to do anything that could get me thrown in prison.
Of course, and to that point, nothing that, obviously I can't speak for everyone in this space, right? Because there's unscrupulous people in every industry, real estate, mortgage lending, you name it,
Yeah.
finance, tax planning. But, never, ever, ever would anything that I would recommend be a offense of the nature of a legal matter that would be, some type of penalty above and beyond what would be, hey, pay the back taxes and the interest.
Right.
Right. The worst case scenario that I have when I'm working with people is if for some reason the IRS were to pick on this, which they haven't historically, but if they change their mind, because there's been things that have been around for years and years and years. And it just so happens that a lot of people start using that tax efficiency and the IRS is losing a lot of revenue. Well, they're going to change their mind on that and say, let's figure out if we can slow this down. And a lot of times when they do that, they find groups that are not doing everything right. And then all of a sudden, they hammer the ones that aren't doing it right. And they should, right? The bad actors. But what happens to the entire industry? Now everybody thinks, oh, I can't do that. That's not true.
It makes everyone more cautious. They've set an example that,
for example, there's always a dirty dozen list the IRS puts out there. One of the dirty dozen list is closely held insurance companies. So people hear captive. Oh, I can't do it. Captive, that's on the dirty dozen list. The IRS is coming after that. Well, did you know that captives have been around for 5 decades? Did you know that 70% of the top 1,000 Fortune 1000 companies use captives? Do you think there's an issue? Do you think that they're going to go do something that's not right? No, it's a matter of, partnering yourself with an organization that does it wrong. Same thing when you have a financial advisory. Yeah, it's okay to invest with this advisor, but they might give you a lot of bad advice, which loses you a lot of money.
Right.
Similar, right? You got to work with the groups and individuals that know how to do it right.
So what would be a red flag that somebody should look out for? Even myself, I'm a small business owner. What's a red flag that somebody is being unscrupulous, as you kind of caution against? What is there something that should sort of tip off? Warning bells. Go check with somebody else. If somebody hears something, is there a particular red flag to look out for, or a common one?
Yeah, I mean, that's a great question, Mark. I would have to say in this space, if the person because myself, I'm not a CPA, I'm not a tax attorney, I'm not a securities licensed investment advisor. I've got years and years of experience running a business, and I've done a lot of due diligence in the tax efficiency space, and I've done a lot of vetting of the groups that I work with. If someone is talking to someone like me, obviously, if it's me, it's going to be a certain way. But if it's someone like me, and they're not willing to have a conversation with their CPA, they're not willing to have a conversation with another attorney that they know that's in their camp, that's a yellow flag.
Yeah.
Like for me, hey, I'll have a conversation with your CPA. I'll have a conversation with your wealth advisor. I'll have a conversation with maybe an attorney that you work with that's on retainer. And I'll explain these things with you because they might be over your head. Mr. or Mrs. high income earner or business owner, because it doesn't have to be a business owner. It can be, I can work with high income earning W-2s as well. Maybe these things are over their head. Okay, so now even though I can talk tax code to them all day long, it's just
right. You could please don't. I can't.
I'll talk to your CPA. I'll talk to you, and then of course now they understand that there is a layer of confidence, and also being able to point to the why, like this is what you can do and this is why you can do it, right? And then it's a matter of just going through, and of course everybody's going to have their different perspectives, but at the end of the day, that person that is in pain when they write their tax bill, because I don't talk to anybody that's not in pain. If they're not in pain, then they just write the tax bill. But when they're like, this is hurting, and I know that there's other people paying less, and I don't know why, my professionals say I'm doing everything I can, but my I've got other business owners that I've been in contact with, or other people that are saying they're paying a lot less. How are they doing it?
Yeah.
Those are the ones I talk to and say, here's what you've been doing and here's what's possible.
Yeah. Yeah.
Here's why it's possible. And if their CPA is not comfortable with it, I just say, well, it's your decision, and doesn't mean that your CPA is just because they're not comfortable with it doesn't mean it's not completely fine for you to do.
Yeah. Yeah.
So then they have a decision. Now, of course, most of the time I'm able to speak to the tax professional and get them to a point where they're like, this is okay. If the business owner wants to do it, or if this person wants to do it, fine. I understand where you're going, and it's their risk, right? They might have a risk for audit. And if you feel confident that they're going to get through it, and I don't know, I'm indecisive, or they say, this is fantastic. You're the person I've been looking for the last 5 to 10 years. Now I have 12 clients or 15 clients that essentially I would like to introduce you to, right? That's kind of the panacea for me with CPAs. It's like 3 out of 10 are like that. The other 7, okay, 3 out of 10 are like that. 5 out of 10 are kind of neutral. It's up to the client if they want to do it. And then there's, that final 2 or 3, they're like, absolutely not. If it's not a mortgage interest deduction, you're going to jail if you do it, right? Those are,
right.
That's the 3. And wealth advisors, generally, they always want their clients to have more money. So they're not concerned. It's just a matter of their broker-dealer allowing for the introduction to happen. Mm-hmm. The broker-dealer is fine with making that introduction, and they're fine with however that happens, whether they're benefiting or not benefiting, right? Sometimes a rev share. A lot of times it's better for them not to benefit, because their benefit is that they make an introduction, their client ends up having a lot more money because they're paying less tax. Well, now they can essentially benefit from that, from shepherding more of it, but they don't earn any money for what I do with them.
Yeah.
So they keep that separate. That makes sense.
Mm-hmm. Yeah. Yeah. Again, our guest is Mark Myers. Peak Profit Solutions is his company. You mentioned CPAs. I know one thing you help business owners with is finding an accountant. Like what questions we should ask to see if they're a good fit. Like I've had 2 different CPAs in the course of my business. It basically came from referral. Like I don't know if this if the CPAs are a commodity. Should I be finding one that specializes with small business, with consultants? What questions or what things should we look at to find a good fit with a CPA? I haven't thought about this before, to be honest.
Yeah, that's a fantastic question. And obviously, when you have a tax professional that has experience in the type of business that you, or the type of work that you do, that's always a bonus. But even if they have that, my biggest questions or guiding points is ask them how frequently you're going to meet with them. And if they tell you once per year, walk away. Mm. And when if they do say, oh, we do meetings, more than once per year, okay, how frequently and what do those meetings look like?
So if not just once a year, what frequency would be ideal?
Mark, I recommend quarterly. Mm-hmm. And also I recommend that they're forward-facing meetings, right? Because most CPAs don't have the bandwidth or the structure in place to really look forward and say, okay, what can we do proactively to reduce tax? They're looking at what have you already done? What expenses have you, what can you purchase? Mm-hmm. What capital equipment can you purchase to reduce your tax? That's rear facing. So quarterly meetings that are forward facing. What can we do moving forward next quarter and the following quarter and this year to get ahead of your tax bill and reduce? That's the key.
Okay. And any other key factors, or that seems really be a good indicator of how often they're willing and able to meet with you?
That's one of the best indicators. And the only other layer would be that they do have additional resources outside of themselves. Mm-hmm. They're not the general practitioner, the medical, the family practitioner that says, I can do neurosurgery, or I don't even offer neurosurgery. So right. if you have a tumor in the front of your frontal lobe, I'm not going to refer you to a neurosurgeon. In fact, I'm going to tell you that the neurosurgeon doesn't know what they're talking about. Mm-hmm. Just deal with the pain. Yeah. That's what a lot of CPAs do. They don't bring those extra layers of efficiency in because there's a lot of reasons for that, but we won't go into that right now.
All right.
A lot of times they feel like they're going to lose their client because these other layers of efficiency also have tax preparation and tax filing So if they refer them to this other person that can do these additional things, or this group, well, that group can also do their tax planning and filing. They might lose a client. Where the good news is, like for myself, I don't do any of that. So that's where I've really been able to carve a niche out. I'm not looking to take their client. I'm looking to provide higher levels of efficiency.
Yeah. Well, good. Again, we've been joined Mark Myers at Peak Profit Solutions. Mark, tell people, I'll put links in the show notes, but where they can find your website. You offer a complimentary session. If people have questions, tell us a little bit about that.
Sure. Yeah. peakprofitsolutions.com. You can learn a little bit about me. I've got my calendar available, so you can literally just schedule a 15-20 minute consult. Literally within 15 to 20 minutes, I can identify how many opportunities are available, and also give a decent snapshot of the potential tax savings available. So I can do that in 20 minutes. It doesn't cost a dime. It's actually a fun conversation. And then, of course, if you want to just peruse and get some case studies, you can obviously go to the site, ask for some case studies. You don't even have to talk to me, but talking to me is the best thing, because we can really drill down on some things pretty quickly.
Yeah. Well, good. Well, thank you for talking to me. Thanks for talking to us. It sounds like you're confident you can help without being overconfident, right?
Learn for sure to that line of overconfidence and confidence. And confident, yes, for sure. I can help just about everyone.
Yeah. Well, thank you again for being a guest here, Mark. Thanks for sharing your story and your reflections and some tips and thoughts for business owners here today. Really appreciate it.
Mark, thank you for the invite. It's been a pleasure. Really appreciate it.
Thanks.